We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
All right, welcome back to the Capital Mindset Show. Hope you guys are having a great day as always. We got some topics here. The description below shows you a brief, I guess you could say, glimpses to all the topics we're going to be covering here today. So, yeah, what a day. I made a tweet out that I promised I would, do this live stream and get my thoughts out there in the world for those of you who do care. And I have some panelists with me. We may be joined by yet another panelist to be seen. But yes, Andrew and Bacon, welcome back. Longtime friends of the show.
No, see, it's been forever since we've done a stream.
It has been.
Thank you for having me on.
Oh, anytime, guys. Anytime, guys. More than welcome. All right. So I have a poll posted for all of you to participate in. Basically, it asks you, are you bullish or bearish data center spend? And let me know. There's no wrong answer. We're going to be going over, of course, what the hell happened today, what China is doing to the U.S. tech market, all the panic that's, kind of filling the markets here. Is it valid panic, right? That's another question we had. And then where's capital going and what opportunities do we see ahead for the market? We had a live stream over the weekend. We talked about some names that may have presented a adding opportunity. I don't think they present the same opportunity they once did, but for people or some people out there, it might be interesting as if you have a position at, or if you've been waiting for a long time on the sidelines, it could be your moment to shine. Who knows? Okay, let's get into, we're right on time on the 5-minute mark or 4-minute mark. Let's get into the death of AI DC spend. What the heck happened today? So it really is something that's kind of funny because it's something that was known for what? Was it a month now? Or at least December
26th?
Yep. So in December 26th, news came out about, hey, this new LLM from China, DeepSeek. And it didn't really matter until recently when a lot of attention started to really get, put on the spotlight as DeepSeek comes out and gets a lot of users to sign up. The performance claims are what is drawing a lot of attention for the cost associated with the training. The claim is that they were able to develop DeepSeek for, what was it, roughly $6 million?
Yeah, 5.6, 5.5.
I think this is the first time we see David on a live stream.
Yeah.
At the club. So, someone is saying it here. Thank you. DeepSeek has been known for months and has been used by Tasty Trade Options platform, according to Tom Sisnoff. The market is grifting narratives. Yeah. We are in agreement there, at least. So at least we can tell you, in our view, kind of what a nothing burger this really is. And we'll kind of break that down little by little, but I want to let my panelists here at least share their thoughts on it first.
So how do you want to go? Do you want me to give just a brief thought? Or do you
how do you feel about it? Just give me how you feel about it.
I mean, in my opinion, not a whole lot has changed. I've seen some argument that the biggest change could be in the power demand.
Mm-hmm.
But in actual CapEx spend, I don't think there's any change. I think there's pretty much consensus on that. From people I've talked to. I don't want to say, obviously, these were down a lot. So consensus was not that. Fear was driving something. But from people I've talked to, that was consensus.
How you feel about it, Bacon?
I feel like certain someone should be able to hop in now.
Oh,
yeah.
Thank you. I did not. Sorry, I had to look down.
Behind the curtains for.
Let me in.
Yeah. Let's get Jesse filled in. Just to be.
We're just asking what you feel about DeepSeek.
Cool. Bacon, I'll let you finish off.
Oh, yeah. It's Speaking of narratives, like when it comes to DeepSeek, not only have some people known of it, one of the narratives over the weekend was tariff concerns, and then it's like, oh, panic for the indices. So when it comes to DeepSeek, I just view it as it's a thing. Like I don't know, eh. Yeah. Anyways, go ahead, Jesse.
Yeah, I don't know. I think it was like my conclusion on it is that I can't really, I'm not super confident in the numbers that they gave out for the development costs, because it's like iterative development and they're building off of other models or their own previous models, but they're also building over other open source platforms and communities. So we're going to see like rapid development across different AI modeling that's open source. So that doesn't super surprise me. I don't think I really trust the numbers that they gave. I think the biggest thing that this shows is how much some of these CapEx spend names have been bid up in the market on forward-looking 1, 2, 3 year demand, and how like they're skating on thin ice right now, essentially. Like any type of change in the narrative, and you're going to get a lot of volatility. And I think that's exactly what we saw. So I don't think like anything behind the AI spend thesis has changed over the next like year or 2 or 3. I could go more into that, but I think a big part of today's reaction was just a lot of names were getting bid up and are really, really expensive right now.
So it's interesting. I think I talked a while ago that there was froth in certain parts of the market, and I said this is one of them. And so it kind of makes sense. Remember when we were talking about the certain areas of froth, and I said data center companies, and I said there's legitimate things in there. So I think you're right on that, saying that it was just anything looking for these things have run a lot and they've done really well. I was making a joke today. There's a stock I'm invested in that has really underperformed these stocks for like the past 2 years, but it was up like 1.5 or 2% today, depending on currency exchange. And I was joking. I was like, haha, it's like me with I'm down 10% on 2 years, but today I'm looking at you up 250% over the last 2 years. Be like, I told you it was overvalued.
Yeah. Well, and it gets like, especially when you get into a name and a thesis starts playing out and you get momentum and hype behind it, it's hard to know when to kind of start looking for the door, right? Yeah. Especially with this, with the like long-term AI CapEx spend thesis, like we do have some information that we can like gather to try to model out future spend, but at the end of the day, it's just kind of like it seems like everybody's just kind of on edge of like, okay, what's actually going to take place?
Yes. Yes. that was the one I was referencing when I was like, I was joking. Some people were like, "Ha, we're making fun of 1 or 2 people in the community." It was like, and I said, "It's this thing."
And there's definitely people out there that are actually like this too.
So the other thing that's interesting regarding like kind of the AI plays, and I think we had been talking about this as a community for like the last probably couple weeks, was the difference between AI plays that are related solely to CapEx spend versus businesses that are going to benefit from efficiencies driven by AI. Yeah. And we saw that play out really nicely today, where like it was all the CapEx spend names, right? All the infrastructure CapEx spend names got hit really hard from that fear of like, oh, now somehow magically they're not going to need the CapEx. While like the actual companies that gain efficiencies and optimize revenues from AI training or AI models either did fine or were up on the day. So
it's like I'll say it here. I don't know if I'll put the person's comment up because I sort of feel bad to put their comment up.
No, you don't.
But they deleted their comment in the last live stream because I said something about Meta, right? And it was a claim stating that, simply put, we made actually we'll break down the whole argument once more. So there's a lot of people who say the costs associated with AI, this CapEx. And the thing is, I want to start by doing this with AI. Every time I say the word AI, because some people just define it as, when they are saying it, these LLMs. Other people are defining it more broadly, which, Jesse's already, every time you say, it's just like only these LLMs, you got to be very careful because you're narrowing the conversation quite a bit. And in reality, all it takes is a simple Google search, by the way, for anyone just trying to do research on the differences. You can search the differences between what Meta does internally for ad targeting and what the difference are between that and an LLM, and all the different, let's say, necessary investments that had to go into that. And a lot of what Meta had done over the years has been in those internal tool sets. But let's get into. So a lot of people say all this CapEx is useless CapEx, right? And so that implies, or that doesn't imply, that literally states it draws no net new benefit in terms of sales, cash flow, or anything, because it's useless CapEx. It's not profitable whatsoever. It's a burn, right? So it's the equivalent of, let's say at my firm, I say, I'm going to make up numbers here. We're bringing in $1 billion in free cash flow. And I look around and I'm like, I'm going to do an exaggerative comparison. We don't have enough chairs around the office. I'm going to start buying chairs, and I'm going to buy 100 chairs per employee. Why? Because why not? Right. And why am I saying the example of chairs? Because I'm trying to exemplify something that has no positive value, nothing that contributes to the business. So let's say we spend $500 million a year into, chairs. Right. That way we, what happened? Did something happen? The whoa?
No, you're saying there's no value in chairs.
Wait, okay, but up to a point. Right?
How about you go? How about you go sit on the floor?
No. I think it's okay.
Bob, you need 3 chairs to make him more productive.
We need to cut costs. We can't afford chairs.
You were pivoting, but you're still making $1 billion plus in free cash flow in the future.
We got. We have to reach our target. My bonus depends on it. Anyway. So it's like, okay, I'm spending all this money on chairs, and then suddenly, let's say Andrew comes in, he has some amount of money, and he's like, I'm going to buy this company. He's going to do his due diligence, and he sees like, wow, this really dumb executive over here, he's spending all this money on chairs. So if I buy this company, I can, obviously stop that expense and get the full $1 billion in free cash flow because they're spending money on this random crap. Obviously in the real world, this is a very exaggerated example, but that's what a lot of people are almost making the argument sound like. And so when they say that, I'm listening to them and saying, so you're saying that the free cash flow is actually way higher, but they're artificially suppressing it. So why aren't you buying leaps? Why aren't you buying, like, just selling everything and buying so many calls? Because the moment that they say, oh, this is all dumb spend, you're saying that Meta has a much larger free cash flow margin than it currently has. And that's what a lot of these people unknowingly are saying. I disagree with the premise entirely because I'm operating from the perspective that we've seen significant improvements in the business since 2022. They've said we're going to be doing the following investments. Back then, the narrative, and I tweeted this out, of like, this reminds me of that narrative where I don't know where people got the metaverse investment figures. They looked and they were talking about the figurines, the crappy, Mark Zuckerberg, digital Mark Zuckerberg. Yes.
We talked about this. We have a recording on it. We should release it at some point. I still remember to this day, Chamath. So what Chamath did, I know where he got the numbers from, by the way.
Oh, where did he get them from?
So because I remember watching that. So he took, I think 25 billion was what they were spending that year on CapEx, right? Mm-hmm. And they attributed 100% of it to the metaverse and then forecasted out for 10 years at that level. And saying they're going to spend 250 billion on the metaverse. That's how he
Which is hilarious because, like, in the financial statements and in the earnings calls, I think it was 16 or 18% of CapEx was actually R&D towards metaverse.
He's a VC. He doesn't do research.
Well, there goes the moving bus.
I mean,
True.
But no, to the people that we know, there's actually some people in the community that were at VC firms that they know. I like to joke with them. I'm like, see, let me just tell you, if you're a short seller and you know VC, it's like the complete opposite ends of the spectrum. Like, so
One's an ambitious optimist, the other one's an ambitious pessimist.
yeah.
I prefer skeptic personally.
Skeptic. Yeah.
Aggressive skeptic, maybe.
Aggressive skeptic.
But that's where they got those numbers from. So they took
Yeah.
the 25 billion capex, forecast stuff for 10 years, and like Chamath has a big reach on his platforms. Like he was running with that, and did he flip? Yeah, after I think a quarter or two of good results, he did change his tone on Meta. But at that point, he was saying Meta's dead, basically, and like he was comparing the capex spend of Meta to the Apollo flights to go to the moon on the metaverse. So like, anyways, so continue with your point.
No, but it's just like this is the case for many of the hyperscalers. So Meta has developed their own internal hyperscaler that they're not marketing out. They're not getting any monetary benefit from external parties. It's just only for internal use. So in a way, we have more of like we don't have the noise that we do at some of the other hyperscalers, because and some might argue that's the other hyperscalers are better positioned because they can benefit from this capex in a direct and meaningful way. So really with Meta, we do have to kind of look at how have the actual operating cash flows and income actually improved over that period of time as that capex has been, has gone through the system. So that being said, a lot of the skeptics, or not skeptics at this point, I don't really know what to say, because I feel like sometimes it's like discussing with someone who is almost telling me the same thing I heard with Netflix, the same thing I heard with Meta, the same thing I heard with Salesforce, same thing I heard with Amazon.
You're specifically talking about the Metas, Amazons, Googles, Microsoft, not necessarily the CapEx spend people, or are you talking about both?
I'm specifically in this case talking about the hyperscalers. So anyone with a internalized hyperscaler. So Meta, exactly. Not NVIDIA. So if that narrative is right, the one you should be bearish on, if you conclude and you're super confident, you should be bearish NVIDIA. But you wouldn't, I don't think you would be, it makes sense to be bearish the hyperscalers at all.
No, if anything, I mean, what you're saying is one of two things. You're saying, okay, if scenario one is true, and we assume everything DeepSeek says is true, and also I have their actual report, and if you read through it, the 5.5 million is maybe the most misleading number I've ever read that people are running with, and we can get into that.
Let's get into it.
Before I do that, though, let's just assume that's true for a second.
Mm-hmm.
So what you're telling me is, I have these costs like GPUs, building out data centers, training these algorithms. All of a sudden, GPUs are going to be cheaper. Algorithms can train faster. I won't have to spend as much CapEx to build out data centers for more GPUs. How is that a bad thing?
Well, and it's not, it's not that GPUs will be cheaper, right?
Well,
but it's that you're going to be able to do more with the same amount. And to me,
right. I guess that's true, because my thought, not to cut you, I'll let you go. My thought was, if you need less, potentially demand goes down. But go ahead.
Yeah, no, but you become more efficient, right? So like my biggest thing of one of the biggest things I think that would be really, really bad for the AI cycle is if companies invested all of this money into like AI training models, inference training, hyperscalers just dumped all this money into it. And then we get into it a little bit and there's no return on invested capital from like businesses aren't seeing an adequate return from that. Right. So now if you're telling me actually the cost is way, way lower, like theoretically, if it is, if they crack some code, and it's way, way cheaper. So now you're basically telling me that it's way, way cheaper to have a better model, which is going to be less on like a pure per query. And it's probably going to be a quicker path to profitability for a lot of these companies that are like using LLMs for like customer apps.
Yeah. I guess my thought would be that you need less GPUs, you probably need less space. It'll eventually cause probably demand drawdown at some incremental level, but
Yeah.
either way, I don't think it's bad. Now we can get into the actual spend. Okay, so I'll just share my screen if that's okay.
Mhm.
Mind if I do that, Fabio?
Yeah.
At all?
Et al. I am et al. Yes, go
Let
ahead.
me turn that off. That off. Okay, so here is where they talk about, this is where the 5.5 million comes from. And so they say, lastly, we emphasize the economical training costs of DeepSeek version 3, summarized in table 1. We don't need to go there. Achieved through our optimized co-design of algorithms. So what they say basically is this is the cost to train DeepSeek, and it was only 5.5 million. It says, note that the costs include only the official training of DeepSeek version 3, excluding the costs associated with any prior research and ablation experiments on architectures, algorithms, or data. So what they're saying is this isn't the cost to go out and buy the GPUs. This isn't the cost to build the center. This isn't the cost to train the models that then they use to then train V3. They're claiming this is the cost to train this one specific model with nothing else, I open this another tab. Oh, is it right here? Okay, I guess it's train. Yeah.
Yep.
So all it is the GPU hours to train this model. Like this is the table. Employee wages aren't in here. Electricity costs. I mean, like they might be saying maybe that's in the GPU hours is that stuff, but this is an adjusted cost of goods sold on one model. That's what this is. Like, and you don't even know if this is true. And like, I don't know. I mean, if you break out costs this way, OpenAI might only cost 10 million to train their models. Who knows? I feel like so much of the cost is in the acquisition of the GPUs, in the building out the actual facility. When we talk about the capex that these companies are doing, this isn't capex. This is opex. And so the capex so just so we understand the difference, capex is capital expenditures. It's what you pay to acquire the physical things, what you're paying to acquire the facility, the GPUs, probably electricity that goes into that, any kind of ancillary cost that goes into building out the actual thing. OPEX is what it costs you to run something. So once it's actually built out, the cost to run something, operating expenditures versus capital expenditures. This is all OPEX data. So when people are like, oh, well, they're spending 50 billion and these guys did 5.5 million. Well, you're not even talking about the same kind of spend. We don't know what CapEx, it's very much seemingly, like it seems like these guys have a lot of GPUs. People think they have at least 50,000 clusters, I think it was. I think if I'm using.
And let's talk about this comment. We were talking about this not too long ago.
Yeah. It was the Alexander Wang. He's the Scale AI CEO. Mm-hmm. And he basically said he's like, oh yeah, they have at least 50,000 GPUs. So this is something that we've been talking about in the CM community since end of 22, beginning of 23, I think, about NVIDIA. Everyone knows they are selling their stuff to China. And yeah.
The market. I'm going to dig this out of you. What's the number one market for GPUs?
The number one market for NVIDIA, where they sell?
Yeah.
Is the US.
What is number two?
Last quarter was 14.8 billion.
What is number two? Well, sorry. What is number three? Let's skip number two. What is number three?
China, 5.5 billion.
Okay. And who is number two?
Singapore at 7.7 billion.
That's really strange, Andrew.
Yeah. It'd be really weird if SMCI had a bunch of, factories and there was distributors in Singapore that could then potentially sell to China.
United States, largest economy on the planet, is number one. That makes sense to me. Singapore
I mean,
Borderline-
they are an industrious people, but
borderline modern city state.
Mm-hmm.
yeah, a singular city state doing that much.
Singapore
Mm,
AI bot.
something doesn't
That
add
might
up.
be LLM.
Are you saying that the narrative is folding like a cheap suit?
And so yeah. So and this is something, by the way. Like, I'm not the one who pointed this out. This was talked about by I would say industry experts that we know in Capital Mindset back in 2020, like beginning of 2023. They're like, oh yeah, they're stuffing so much into China right now. And that's why it's really funny. I was trying to find the article, but there was one where like basically NVIDIA was getting like asked about, why are your chips in China? It was like NVIDIA doesn't know why their chips are in China. It's asking partners like SMCI and Dell. And it was like, yeah, they're not. I mean, Jensen is quite a smart man. I don't think he's that stupid. He's like, man, Singapore, they really like those GPUs over there.
It does almost make me feel like at least authorities there were not there. Sorry, in the United States were kind of asleep at the wheel there. They were too busy stopping, different departments, but I'm just going to make the joke anyway. They were too busy stopping, and protecting the consumer from Spirit Airlines and JetBlue. That was more
dude,
about.
Dude, what about Michael Kors and Kate Spade?
That's right.
Yeah.
That's
Yeah.
right. Thank
Happens
goodness
free
they
and-
stopped that. We would have been devastated if it were not for them to stop the two, lower tier luxury bag companies merging. Yes.
Luxury is kind of a stretch, but we'll.
Yeah, luxury is a stretch, but yeah.
But yeah, no, the Spirit Airlines. I was talking to my parents about that because they've always flown Spirit, and I was like, "You're not gonna be able to do that soon." They're like, "That sucks. Why can't we do it?" Because someone blocked the merger. Why would they do that?
To protect you.
Yeah.
Protect you. Yeah. It's for the consumer.
So, yeah.
Okay, so we covered they're very likely lying / misleading. They're not revealing how much GPUs they have for obvious reasons because they're not even supposed to be having. They're not supposed to have these GPUs, but here we are.
And a lot of people also think that they stole the weights of their LLMs. That's very like I've heard. I don't know confirm, but some people think they stole their LLM weights, like corporate espionage, from OpenAI. There's been some, how they can have ghosts in these machines. Some of the ghosts seem to reference OpenAI. That's what people say. So,
Very nice.
yeah. But the weird thing too, like you said, 27th of December 2024. This isn't something like oh, whoops. I hate that it does that. But this isn't super new, right?
Mm-hmm.
So why are they reacting now? That's an honest question. Like, why is this? Is it just like the news headline came out?
I can't tell you, other than markets are efficient, perfectly efficient and price things in, all known public information. I think when was the no, yeah, that's right. Everything was already released. So I couldn't tell you.
When was the report released?
December 27.
December 27.
For DeepSeek 3?
Yep.
Yeah.
Or,
Yep.
I know, like,
And
wasn't
if
there...
you want, I'll put this in the chat, by the way, if anyone wants to, in case anyone wants to read or anything. But
I mean, over the weekend, it was like, was it either analysts or people in the tech community or whatever started going off about it, or maybe brought it up. I don't know. It's kind of funny. Like,
yeah. And Keith Allen's asking any thoughts in the rumor that Jensen Huang reportedly fired employees behind innovation, allowing AI models to use only 1/6 of GPU. I doubt that. If anything, he would say this is great. We're going to keep it. Like, worst comes to worst, he's going to say that's great. You're super smart people. I'm going to promote you, and we're not going to push this product out or something. Like,
shut up. Here's a bunch of RSUs.
He's like, I don't know. Why would you have like the people working on that project to begin with. Like, no, that doesn't really make a lot of sense to me. But yeah, so that's that. It's why I'm somewhat confused about the reaction to an extent. Now, here's the thing: we said valuations are very frothy in this space. I thought they were priced that, and Fabio's talked about this before. You don't usually want to buy a company that's priced to have the perfect story, because like the littlest chink in the armor, and right,
Done.
Yeah.
and it's just, yeah, we've talked. I think it was, I don't know if it was Microsoft we were talking about this once, or I don't remember who. The littlest issue, and you get a minus 20%.
It was also the construction company that we like that makes data centers.
What about them?
That they were in that setup. They needed consistency, and
Yeah.
we're gonna be talking about them. Don't worry, we're not gonna bury them or gaslight you guys. Not gaslight, bury the lead.
Yeah.
So,
but we can roll into that. I don't know if that's where you wanted to go or what's on the
yeah, I reorganized the timestamps. So everyone who's listening, we refresh the live stream. You'll be able to see the new timestamps. So I'm adapting them. So if you see me get quiet and I look over to the right, it's because I'm like, oh, we can organize it a little bit better and do it this way.
So Sterling infrastructure.
Yep, Sterling.
Let me just pull it up here, unless you want to share, but I got it right here. So this is a stock we've actually been long it since here,
late 2020.
Three.
Yeah, late 2023.
Something back there. So yeah, that. Woo, I mean, you zoom out though. This is what I'm talking about. Like, someone's like, haha, I told you you're screwed. It's like, oh, that's great. I mean, you compare it to this, and I still take that, right? I mean, so that's why we made the jokes about this stuff, but it was a company, and we kind of talked about this, and I've been like, I think you can tell, like, I actually trimmed some of it out of mine. I think Five may have gotten fully out. I don't know where you're at with it, but we talked about how this company is priced to have gross margin expansion and continued AI data center growth in their build out.
Yep.
And the second there's like any kind of damage to that narrative, I mean, we saw what it looked like one day. Boom, down 23%. But hey, it's up 3.3% after hours, so everything's good, right?
Oh, it's recovering.
Let's go.
And that gets into a question, because to kind of tie that up to the first topic we covered. So if I find, because everyone's thinking there's going to be a decline in CapEx spend, I think it's too early to say that. And I want to say right now that I think that's not going to be the case. And we're going to find out in the earnings calls right now, right ahead of us.
Mm-hmm.
So there are many ways to play DC spend, and they've gotten decent now. Some of them have gotten decent. When we did the live stream on the weekend, none of them were really that appetizing, except for maybe TSM still being appetizing. But now it's a different story. Now there's quite a few pickings. And like I said at the very beginning of this live stream, it may not be, as good as it once was. I'm not going to, lie to you guys and say it's the same exact opportunity. Not far from it. Andrew has shown, if you saw the chart when he pulled it up earlier, it's still up. What is it, over 100%?
85% over the 1 year, and
and then that's what I was. Well,
it was
sorry,
2023.
Yeah,
somewhere around there.
My original purchase actually was around at 30.
Yeah, Andrew was super early.
Mm-hmm.
Yeah, but it would have been nicer if it was up there. Is what it is. So one thing someone asked, by the way, that's like been repeated a lot is Jevon's paradox. Have you looked at that? Which is, we've talked a little about this. I don't know why people like to like have complicated names for things. Not saying that Keith's doing this, but like I guess it's just a quick way to explain. Is it Jevons or Jevons paradox? I don't know how you're supposed to pronounce it. But basically,
Yeah, we know what you're talking about.
it's that the increased efficiency in using a resource leads to an increased consumption of that resource, which I don't know why it's a paradox, because it's completely logical. If you have a higher ROIC, you will spend more money on that higher ROIC. Like,
No, I would never do that. That makes no
right.
sense.
So just to explain, to break it down, I think here's the example I used, because people are saying, well, this thing's gonna be more efficient, so we aren't going to spend as much money. That's the equivalent, because if you think about it from a business perspective, what you're saying is we get a higher return in this area now, so we're going to spend less over there. Well, that's the equivalent of me going to Bacon and saying, hey, Bacon, you can buy Crocs today at $100, which is a 6% or 6x free cash flow yield, or you could buy Crocs at a 3x free cash flow yield. Everything's the same, but I'm offering you at these two things. And you go, well, since I can buy it at a 3x free cash flow yield, I buy half because I'll get the same nominal return, so I'll buy less. It's like, no, you'd buy more. You'd say, hey, let me go sell my kidney and I'll buy even more Crocs, because now you're getting an even greater return. And so the argument that these are more efficient, therefore there's less spend, is actually backwards. It's the other way around. It's if they're more efficient, you're going to get a higher return on it, so then you're going to invest more into it. Did I miss anything?
No, I think you nailed it.
Yeah.
At least I followed. I don't know if chat did.
Oh,
Hopefully they know.
And the one thing is, you're still in an arms race.
Yes.
Microsoft, Oracle, Meta, Amazon, Google, they're all still in an arms race.
No, they just surrendered. It's over, guys. It's over.
It's only leg day.
So that brings up the other point, right? Which is this is probably, and you pinned my message today.
Mm-hmm.
This is probably, I don't know if you want to bring it up, but it's more, I put a comedic spin to it. But
let me do this.
This is probably the change in which the United States really starts to almost wake up. And you thought we were awake before. The United States was awake before. I think no. Now it's probably going to accelerate on a whole new level. So basically, what I'm getting at is maybe accelerate those timetables a bit.
Okay, so was that in investing chat?
And it's not because of any materiality. It's the sentiment change, the fear that it brings, whether warranted or not, is going to have those rippling effects where you're going to start to see movement of capital and emphasis on certain investments even more than before. And you might have thought that we couldn't have been more focused before. So, you're looking for, no, if you can't find it, don't worry.
I got it right here. I just want to make sure there wasn't anything like off on the screen.
Oh, did you block out Bacon Social? It was in the message right below that.
Oh, thank you.
Bacon Social?
Yeah,
you want to block that out?
Yeah,
Got
1,
it.
2, 3, 4, 5.
6, 7.
Yeah.
Today, January 27, 2025. This is the U.S. wake-up moment, and it's just starting. U.S. is about to go apeshit on investment in tech. And then someone said, "We want picks. Don't give us generic stuff."
I was trying to be comedically epic, and then Dr. Latina, we want picks.
Welcome to Capital Mindset Discord.
And I'll do a super reaction. We'll do. Where's the fire super reaction? Here we go. We'll do it for you. Not hard on fire. What is it? There we go.
Oh, you supered it too. Very nice.
And then Blubba, we want shovels too.
So yeah, I guess that's just the summary on that, huh? Or was
so I got a question though, because is the U.S. government restricting exports from the US to China for NVIDIA GPUs, or like can NVIDIA just
theory.
in theory, right?
Yeah, it's in theory.
But like, how much do they actually export from the US?
NVIDIA
Right? Yeah.
GPUs.
Yeah.
Oh, because you're saying they make them somewhere else, like they might make
Yeah,
them
that's what I'm saying. Like,
in
are they
Taiwan.
exporting everything from the US? Or like, is there any type of crackdown that the government could do that would drastically affect NVIDIA's China sales?
Well, even if you said we're gonna prevent you from selling them directly to China, I mean, because really the government was just telling them, like, don't sell to China. But like you
Yeah.
can't really stop them, because the only way you can stop them from doing that is saying, well, also don't sell it to this country and this country and this country, because
Yeah.
Yeah.
if you look at what NVIDIA does, they sell to distributors.
Yep.
And they can't control where the distributors distribute. That's them.
Yeah. Like, what are you gonna do? Gonna have like a team of inspectors follow multiple crates?
Like,
Yeah.
Well-
could NVIDIA actually control it if they wanted to? Yes, they could just be like, why are these in China? Or put little tracking devices on the things, or they'll say, why are these in China? We're cutting you off. Like, if they really wanted to, they could. But they're
No,
a
they're not going to want
corporation.
to.
They have a profit
Oh.
incentive.
But what's the chance that like the government is actually able to crack down on them more?
I don't
For
know
that.
if you. I mean, it's kind of tough. It's like you have a student child who's like a amazing student athlete, straight A's, captain of their sports team. You really want to punish
Just
them?
punish them. Yeah.
You're too good at sports. You're grounded.
You're too good.
And so, but yeah, I don't know. I've heard some arguments too that one interesting argument that I heard on power.
I want to say
Uh-huh.
it is technically the law of the land, because I just wanted to make sure it is part of the CHIPS Act. Sorry, it's not part of the CHIPS Act. Sorry, I don't know where I got that from, but it is technically the law of the land. How they enforce it though is up to like that gray area. That's what I wanted to say.
It's what?
That's where the gray area is. So like there could be enforcement through fines, for example, on NVIDIA, as a hypothetical.
But we're not the EU, so we're
no. So that hasn't been
Yeah,
done yet, but
or do like the 29 quintillion, like
Oh, the Russian fine on Google.
the Russian fine on
Yeah.
on Google.
Or Alphabet Holdings,
Yeah.
technically.
Yeah.
at the present moment in time, it's like there's not really anything happening. So NVIDIA's in the clear. But
yeah.
And those restrictions, I mean, they're expanding. I mean, they are expanding. They were expanded into the equipment codes. We know about those, and they had to roll those back. So applied materials, Lamb research, they had to basically, pause all of those. ASML, same thing. The tariffs that are just announced or talked about, by the way, are kind of funny, because you have no choice but to buy them from Taiwan. So, and it's kind of peculiar to choose to do it to Taiwan, but it's not official yet. It's just said, because if it does occur, all I envision is that TSM is going to be like, sorry, pay more. I'm not eating the tax cost. You're just going to pay more, and that's it.
Yeah.
So, yeah, because they'll ramp up production here in the United States over time, but the third fab for the advanced nodes, they're not even going to be, I forget when that's going to be up and running, but the second fab is going to be up and running here soon, but that's all for the less advanced nodes. So the first one and the second one. I don't know exactly when the third one's going to be done. I believe it's like 2 years or so. So still a while.
Yeah, because everybody cites the paradox recently, but what about Hofstadter's law?
Andrew, my goodness.
I love that law.
Bro.
God. Dear God. Bro, that's just
Bro.
bro.
And then this.
Bro.
We can't share that on stream. We'll literally get demonetized.
Yeah,
We will.
get canceled.
Not,
Thanks,
yeah,
Andrew.
Oh my gosh.
I'm a mature father now.
Yeah, you are. The maturest.
Yes, the fatherist.
The fathers.
Yes.
By the way, I literally sit here because I'm on baby duty always, like when I get home, and I just like have like my baby monitor up the whole time. And so when
Nice.
she starts to go, I'm like, oh, you gotta go. But anyways.
Yeah, so-
On to other things. So what were we talking about?
United States and
Oh.
the gray area of them enforcing, bans on China. So, in any case, the whole DeepSeek, I mean, it's kind of hilarious. That's why I think really what's going on, this sell-off, we'll probably look back and say that was silly. That was funny. Is my prediction on that, but we'll have to see. You know what really worked well today is the barbell approach. The mortgages killed it.
Yep.
What do you mean barbell approach?
Having multiple themes.
Oh,
Yeah.
well, yeah.
Yeah.
Yep.
But we'll talk briefly about some of the other names, because I think we already talked about in passing Microsoft, Amazon, Alphabet. We can talk a little bit more about Alphabet, but because Alphabet fell which was a bit different from the rest, right? So Meta goes up, and we already talked about why we think that makes sense.
Yeah.
But Alphabet down 4%. What's the market afraid of?
It can't be above 200. That's
Can't
the
be.
rule.
That's one
That was the
theory.
breaks.
That is one
That's the
theory.
rule.
I theorize that the concern this is what the market's thinking. It's just like literally going through basically proverbial tea leaves, but the market is thinking costs go down, and right now the prior argument, and I got off the phone with a friend of mine who's pretty familiar. This was earlier today. Oh, this sounds wrong. Doesn't work at Alphabet. Should clarify before we continue. But one thing that was interesting was part of the conversation was like the monetization aspect of these LLM products, right? We all know they're losing money on every person for the most part. It's not a profit contributor. Right. And when you're looking at these versus search, we know how to monetize search. We not we as in me and Andrew and Jesse and Bacon. No, but as a business model that's already been discovered. There's already a proven way to do that. And then moving from that to something like an LLM product, we don't quite know how to monetize that the best way. We because the old model is advertisements, and we know how to do that. But we don't know how to grab advertisements and somehow put it into an LLM and not destroy the experience entirely. Because I can kind of imagine if you start to infiltrate my responses when I'm searching something in whatever LLM and it's filled with ads, that would destroy it to a greater factor than when I'm Googling something and just like the first couple links are, maybe an ad or something like that. That is something that has to be figured out. And if it's not figured out, this is where I'm getting with this is acquiring the customer right now, acquiring the user who is utilizing the search functionality at Google is not an attractive customer at the present moment because they're very unlikely to pay. They're not likely at all to pay. They're not going to pay for search functionality. So taking them on is just losing money. But something has changed in the narrative, and that is the cost may be coming down drastically. Because before, a lot of people correctly compared what was the cost for all the searches done on Google, what is the cost of all the searches or questions and answers done on, I don't know, ChatGPT or something like that. And it was drastically different. So I'm not saying this narrative is correct. I'm just trying to explain maybe what the market's thinking. The cost is coming down. Is it going to come down more? And is it going to come down even more than that? and then after that, even more than that. So what's that going to look like? Because then you can get into maybe a monetization model that can make sense. Is that true? Is that not true? I really don't know, but that's kind of what I was reading into it.
I mean, what else would be the reason for it? It's relative large sell-off, because that's what makes sense to me too. If you compare it to the other, like Apple was up today, but I mean, heck, that thing's been Apple was up a
down
lot today.
recently. Yeah.
Yeah, it's been crushed though lately.
Yeah,
Like,
yeah.
crushed. But
On when I log into GOOGL, it just like defaults to Apple on mobile.
Hey,
and
sponsor.
But when I log in on mobile, it defaults to Apple every time, and I just see if the chart looks like this. Just like, but
It's
yeah, I mean, go ahead.
yeah, I was just gonna say, like, it's funny that, like, with Apple and Meta being mentioned and how they did. The friendly bear mentioned that he may have seen something when it comes to options activity with those two companies.
Which
Possibly
company?
some sort of degrossing. Meta and Apple.
Oh.
But again, I don't know. I didn't heckle the man
Yeah,
for further
Google
detail.
is pretty far and away the underperformer. You have Microsoft down 2%, Apple up 2.8, Amazon up 0.25%, Meta up 2%, and Google down 4%.
Mark, man, you can't beat him. Okay. Okay, we'll find out Wednesday. But,
Yeah.
I don't want to underestimate him whatsoever.
Whoa. Mario, you actually go to NMSU? That's pretty cool. That's like a rare comment here.
Mario doxed himself. No.
Hey, it's a school of like 30,000. I think he'll be okay. But yes,
Hooray.
fellow Les Crucian. I don't know if that's even their board, but anyways, continue on.
So, on another note, Talon Energy. We talked about it over the weekend. Kind of talked about it as a pitch that is towards the end, and it came back a little bit, right? Again, it's not at like the price it was, where it was really, really, really attractive. But if I was so inclined to add to the position, right now seems like a good pick. But let's start with the bearish points, because you alluded to it, and I was like, yes, we're going to talk about this. What has changed, what we just discussed, is the narrative around energy, efficiency. You got to come to terms with that, because if we became suddenly, we're going to get a lot more efficient and the energy needs are going to come down, then yeah, this demand surplus that we're going to have in the short term, because I think it's only a short-term problem, like I said in the live stream over the weekend. I don't think it's a long-term problem. That narrative just gets absolutely crushed.
I mean, 100%. Easy pair trade though is you stay long Talon and you short SMR and Oklo. But the SMRs. But yeah, so to your point, basically, you can't have, and so this wasn't my original point. Someone brought it to me, I was like, very intelligent, right point. If you're making something and the point of that thing is efficiency, well, if it becomes more efficient, then the power consumption should come down. So if you're saying with DeepSeek, we have become more efficient, now power needs come down. And that's always the thing that people thought it would run on inference instead of at data centers and things like that. And so if you have power consumption needs coming down, well then all these things, the what's CHEG, CEG? It's Constellation Energy.
Yep.
And then you have
CEG.
Vistra, you have Talon. They're all taking a hit because of that. And then you're going to have SMR, you have Oklo. Funnily enough, you're going to have NNE, even though that company should not be above a 0 market cap. Just going to say that right now. That thing's a donut. Just if you can somehow find a way to short it, do it. don't actually do that. But SMR, Oklo, these are things, if you think about now, they have a lot of risk built in because at least Talon, Constellation Energy, Vistra, they are producing now. They have energy plants that are producing energy now. And maybe DeepSeek reduces the energy needs in the future, but at least they're producing now and they'll be okay. Oklo, SMR, they're 5 years out at a minimum. Probably 6 or 7 is more realistic, is what I hear. So if you're telling me now you have to do, and they're talking about building SMR plants, these aren't cheap. These are like $2-3 billion projects. So now you're saying we're just a company with nothing but a couple names, a little bit of funding, and we're going to need to get more. But we have future energy demand. That's been their pitch. Well, now that comes into question. Is there future energy demand? Now, the question isn't, are these guys along? The question becomes, are they a short? And now, but that same discount is being applied to the Talons and Vistras and the Constellation Energies. So that's kind of just where I land with that.
So the report, though, that was just on training, right?
Yeah.
Model training.
Mm-hmm.
So, it just seems odd because like training in a model is one thing, but once you get a good model, it's like
How many
people are going to
people
use it.
Well,
Yeah.
I always thought,
So like,
to be fair, I always thought the SMR companies were a short. So like that's beside the point.
Yeah, no. I'm just thinking to like power and like the general overall, like, we're not going to spend as much if we're making better models with, let's say, less training time. They're going to be more productive and useful. Like, you also have to gain the efficiency on the ongoing use of the model, right?
No.
Yep.
Yeah.
So if you're not, then you're just accelerating potentially the need to grow out your actual prod models. You're like your prod
But
AI hypercompute, right? Like,
right.
I don't know. It's just like,
but has there ever been something that is more efficient that also requires more power in the history of like has that ever happened?
Well, I think it's one of those things where, like, if it becomes more efficient, you free up capacity in other more high value areas of AI to actually go into those, right? I think you see like a shift into other models, right? Other training, if that is actually the case.
Yeah, and for the record, I hold Talon, but I'm just making the argument on the future energy demand maybe not being there. It might not be an unlimited chasm of demand. I think the small modular reactor stocks were questionable to begin with. So,
oh yeah.
So
somebody did bring up ANET a while back.
Mm-hmm.
Your time to cook.
No, it's kind of funny because we were talking in the Discord about ANET on Friday, and I think it was at like 130, 132, something like that. And it was just like, it is getting so stretched. It's trading at like a net income yield of like 1.5 or 1.6 for P, or a P of like 70. And it's kind of like with a lot of the other plays, it's just like price to perfection, right? So, I mean, a lot of these, I don't think the fundamental thesis has changed. I would be more concerned about like market's perception going forward, because they could still do well, but if market perception changes and just re-rates them into a more reasonable area, they could just chop sideways for a long time. Right? Like, you don't necessarily have to have like a huge like contraction in a capex spend for these to just kind of float around a bit. they're still pricing in a decent amount of growth, right? But I don't know. It's kind of like balancing sentiment, perception, and then actual reality. Because for like Arista should not have been trading at $130 a share if management is correct in their guide at all. Like, just shouldn't happen.
But hadn't management typically been sandbagging guide?
Yeah, they sandbag guide, but they also like they're pretty reasonable about their sandbagging. And if you look previously at kind of management's guides, you can kind of like build in a more realistic guide that's a little bit above management. And that's going to be probably pretty accurate. What the market was pricing in essentially was a huge shift over to Ethernet for the back end, right? Just a huge shift over to ROCE v2. So I think they would have had to beat pretty heavily over the next couple quarters to really justify that. If they did that, then momentum could have continued, and it could have like who knows, maybe it's one of those stocks that's such a high quality that it trades at 60p. I don't know. Like, it's just that's not something you necessarily want to rely on, like them constantly beating above and beyond expectations over and over and over and over again. Because it kind of gets to the point where you get into the valuation where it's like, how much of it is actually realistic valuation that you can lay out over the next 5 years versus is it just so expensive now that you're just like waiting for somebody to pay higher? You know what I mean? It's like you're just waiting for the sucker that would buy it for more than you.
Well, and that's
where it's like, ugh.
And that's, I think, why I think I sold out. I thought it was a bit just tough for me to pencil out, like at least with Sterling. It was actually very easy to pencil out how this company works, and still does from here, is do they continue to have that gross margin improvement? And the gross margin improvement comes from the data center build. So we don't see the CapEx slowing down. But yeah. Where are you standing on Arista right now?
So I sold covered calls on Friday. Those are pretty much worthless now. It's like not bad. Like, if I was just looking at it from a new lens of trying to establish a position, I'd probably start establishing a small position now and like really look for like 90s, 80s to maybe get like a somewhat not decently sized, but just like a meaningful for my port position going. So I'm just kind of chilling with it. I added like a small amount today just because I think we could. I think if this sell-off really is off of the DeepSeek narrative, I think that narrative goes away very, very quickly.
And it's off the DeepSeek narrative, but I think it's just when you have a frothy market, littlest thing, it's going to send that. I'm not saying that I'm gonna like. It's funny because I was on the verge of trimming it Friday. And now that it's down like 22% or something like that, I'm like, oh well, the value's like more in line. Like, I don't want to trim it now. So.
A net good.
So I mean, I'm still super confident in the business. Super confident in their fundamentals. Like nothing has really changed other than price, right? So, but at the same time, like. And that's what I'm trying to figure out on Arista and other names too, is like, at what point are you no longer holding something that's in a relatively decent value territory, but it's getting bid up just off of speculation or like who's the greater fool.
Yeah. It's about, somewhat what, Bacon, you've been liking to talk about recently in the club. You got to think sometimes about who you're selling to.
Oh, I ripped that off of Ian Castle, but
Either way, no, but it's something you've
Yeah.
got an affinity to thinking about, kind of
I
mental
think-
sparring with yourself.
yeah, like it's a nice concept to try to wrap your head around.
All right. So we had some questions before we get into the topic of where is capital going, but we had some questions related to the stuff we're talking about, and that's I got a question on why is Broadcom down today. I think that should be fairly easy for us to answer because it's fairly related. But you guys correct me if I'm wrong, but Broadcom, they're right now tied to the data center narrative via their A6 business division, and now. We're now questioning. I'm not saying it's right. We just went through a whole tirade, basically, of why it's maybe wrong. But if that spend comes down, there you go. Now, all of a sudden, you're throwing a chink in the armor of that whole narrative.
Right.
And Broadcom was priced for a continuation of that narrative, and now it's under fire.
And just about any of the semiconductor chips, you're gonna see companies. You're gonna see that.
Not AMD. No, I'm kidding. It's a YouTube darling.
Did AMD get hit today?
It's down 6%. So relative outperformance.
Oh yeah, because I mean it doesn't have a data center.
Oh,
right?
Wow, that's like dissing them.
Well, no, because they tried to acquire. Didn't they try to acquire Xilinx? And it's like, nah. That was trying to get into data centers.
Yeah, they didn't do much with it. Yep.
Very, very, very expensive stocks, and a straw gets put onto them, and they just rumble. Yeah. Like it doesn't take much. Like it does not take much at all.
Now, here's the thing: is the second that this narrative gets maybe proven as wrong, or like, oh, DeepSeek, this is kind of, I think you can see a massive repricing in these stocks too.
Yes,
they're not going to go back to the same price probably right away, but you can see a pretty quick re-rating back potentially.
You know what's hilarious about it? So I was looking at kind of responses to various questions and inquiries, and also from the people I've spoken to who've used it, it's like not even, it's like comparable, but it's nothing like wow.
I think the only thing that makes sense to me is,
which is the funniest part, but
I always think there's no way that, like, because you look at NVIDIA, okay, the dollar volume that traded today on NVIDIA was almost 100 billion.
Yeah.
$100 billion worth of NVIDIA traded. That's hedge funds. That's Wall Street. That's not me and Fabi being like, hey, let's buy 15 shares. Like, this is like real money, And so you think that they're not coming in and going, holy shit, NVIDIA is down 10%. Like, sell it and then I'll figure out what's going on later. But it almost feels like that's what happened because. And I could be wrong. Like maybe people are taking time, looking at it, digesting the information, and responding to it. One, it seems very quick. It's hard to really digest and figure out what's going on. But my thought is maybe people say, hey, I have been holding NVIDIA now for, I don't know, what is it, 6 months, a year, 2 years? Like, is there just about any time frame this thing's been crushing it? Actually, not really on a 6-month time frame. A year. We'll say a year.
Year plus.
Even after this sell-off, I'm up almost 100%. I'm just going to wash it right now, wait for Meta to talk and figure out what the heck is going on, because I don't know. Like, could that be what's going on? Or do you...
I heard that well, for one, there's like been and I don't hold NVIDIA, so I'm a part of that group, but I'm at least like accepting of this. There's a huge amount of capital, or let's say market participants, who are almost like how wishing for NVIDIA's downfall.
Yes.
And there's a lot of, actually underrepresentation of NVIDIA in a lot of institutional portfolios, which is hilarious to say, because it's like you would think not, but
Makes
it seems
sense.
to be the case. So I don't know if it's just like something where this narrative can spread really fast. And again, it's not like it was cheap, like super cheap optically. Like it just needs a little straw because you're pricing in a lot of growth. And so if the growth suddenly, oh, it's not there, of course, down below we go. Because it's trading at what, 40 times earnings now. It's still 40 times earnings. What if the growth is 0%, right?
Right.
We need a good amount of growth from here. We need, maybe 40% growth, 30% growth, not zero or, negative. So you need something. So I don't know, really. I'm just guessing as much as you maybe are, but I do see, and this was something talked to me about, certain NVIDIA longs. They're saying this is still perpetually underrepresented in a lot of institutional portfolios, NVIDIA. And you look at super investors. Actually, can you name me one?
Oh,
There's
that holds
probably,
NVIDIA still?
yeah, there's probably, Druckenmiller sold a while ago, but let me actually look right now. But I think
13F season. By the way, I want to revisit the whole people wanting NVIDIA's downfall. Nor NVIDIA. Heard too many pronunciations. But
Just,
yeah, for later.
Just remember, Kathy Wood sold the bottom.
Whoops.
that is right. I always forget that.
Like the literal bottom. Literal bottom.
Yeah, that was. I mean, she does all the darnest things. So
I got to run here, guys.
all right.
Thanks
For coming on, Jesse.
Later.
Pleasure as always.
See ya.
So the next question, I guess we could ask, because we're right on time for this. I'll actually change it. Or was there one more thing you want to say about NVIDIA?
Well, I mean, for me, it was the next segment with the whole people wanting to, because I think it segues nicely.
Oh, yes, it does.
Yeah. Because the next segment should be, where's the capital going, right?
Yes.
Or at least, what have we observed?
What have we observed?
Yeah, so, in theory, flight to safety. But, like, on the topic of people wanting NVIDIA's downfall, people probably, my guess, more value biased. And as a somewhat value biased guy myself, I've been generally, like, quiet with NVIDIA by and large. Like, I've tried to. And that's because optically, I get it from a value biased perspective. Maybe it's expensive. But you know what else is expensive? Costco. And you know what went up today? Costco. And am I going to short Costco? Hell no. I have no business doing that. I have no interest. So same thing with NVIDIA. Like,
I have a theory about Costco.
mhm.
I've shared it with you in the past, but I haven't shared it with the audience. So Costco, I don't agree with it. I want to be very clear. What I'm about to say, I don't think is right, but it's not what I think is right, is what is happening. Okay. Costco does not care. So, Costco, the market is looking at it almost as if it's a bond because it has it's almost like it has near guarantee profits. Why do I say that? That's insane. Well, we all know about their model. If you don't, the quick rundown is subscription-based memberships, and you go to the store. The store has a maximum markup. Usually it goes to cover the costs of operating the store or warehouse. They simplify the supply chain distribution and make the display items as simple as possible and keep the SKUs very low so they get the best discounts, right? We all know that. So all the profits mainly come from the memberships. Okay, where do these guaranteed profits come from? Well, if you actually look at the churn rate statistics on Costco memberships, it's extraordinarily low, even when price increases occur. On top of that, the average income of a Costco shopper is about $120,000 US. Couple all that together, you have a very robust customer base who can stomach any price increases that are not noticeable. They're not noticeable. We're talking what, $60?
Mm-hmm.
$60 US. You double that to $120. I guarantee you, most people who shop at Costco, if you talk to Costco shoppers, are going to pay $120. That's effectively the cost of an annual fee for many popular credit cards, rewards programs. And what it gets you is you can get the Costco credit card. In addition, you get to shop at Costco. And a lot of people love to shop at Costco. So the market is saying Costco has this guaranteed profit stream out into the future. We'll price that in now. Do I agree with it? No, because I feel like it provides no margin of safety. But is that what's happening? I think so. That's how I can explain and come to terms with 50 times earnings, at least sustaining itself for 3 years. Will it sustain itself forever? No idea. Maybe the market is like, this is different. And then it turns out this is not different. And it comes back down to something where we're used to. Because back in the olden days, Costco traded, in the 20s. Even it's sometimes lower than that. But hey.
Yeah, I find it hard to stomach 50 plus valuation on either earnings or free cash flow for a mid-single digit top line grower.
Haha. But the top line is not what you're supposed to be looking at.
Yeah, but the bottom line is not growing by much more.
I know, because they haven't increased their prices yet. The market is like saying they're going to increase those prices. I don't agree with it, Andrew. I don't agree with it. But the market is saying if they do, that's their lever they pull to grow.
Even if they were growing bottom line at 15%, I don't think it's worth it.
What if they double their membership? Oh, I know. I don't think it's worth it. No, I don't think it's worth it. But you know how we look at some companies and the market clearly provides a really hefty premium to companies that decide their profits, such as Ferrari, Hermes, right? Companies that say, we are going to make this much this year. Very few companies in the world can do that. What do they all have in common? They typically trade at above 50 times earnings, which is insane, sustained. And they're not growing like 50% per year. So they don't have a peg of 1. We're talking peg well over 1. They're growing sometimes in mid-teens.
Yeah. What would you take, Ferrari or Costco? It's a higher quality. We get to determine what we make, which should have a higher multiple. Sans growth, which should have a higher multiple.
Myself says you take Ferrari because Ferrari's customer base is truly immune from anything. I know that Costco's customer base is 120K average, but that's still, and still there is some risk in the international expansion. But yeah, Ferrari is truly a league of its own because, for example, Ferrari doesn't even care about what political backdrop what country you live in. Hey, if you're in a socialist dictatorship, your socialist leaders love Ferraris. So Hermes, Fidel Castro's children, they daughters, nieces, hey, Hermes, they want Hermes too. What's that? I'm not going to get into it, but certain political figures in very poor countries recently seen with Hermes bags.
I don't know the reference, but I'm sure they're. Yeah.
I'll tell you off camera. It's just you can't say these things because some people get upset. But so
yeah. So flight to safety, air quotes, but like I think. Not to insult anyone's intelligence. I think, usual suspects apply. But, like, at the same time, though, with the flight to safety, not to be, like, a crude caveman momentum guy or, like, my belittling of momentum, but not that at all. Healthcare? They've been beaten down, like, a fair amount. Is this going to be sustained? Is there opportunity?
Yeah, no, we definitely saw a rally in healthcare. We saw it gap up recently. Cigna, Evolance, Humana, United Health, I believe AstraZeneca, AbbVie. I haven't taken a look at Pfizer. But yeah, all across the board, I mean, we're seeing pretty strong response on this flight to safety. So Johnson & Johnson up 4%, right?
Yeah.
Do I want to buy these? Not particularly all of them, but some of them, yes, I'm inclined. You know, the ones that we've kind of added to the idea deck, but not everything out there.
All I'll say is the guys who are in biotechs who I talked to who recommended me. I shouldn't say they recommended it, but you know, I talked to them and kind of got a feel for what stocks to pick based on what they said. Yeah, because I wanted exposure to healthcare, but it's way outside my circle.
Yeah,
It's
me
very
too.
far outside my purview.
Me too.
And like you said, that's been doing very well, partially because I think pharma is, you know, healthcare pharma, it's completely outside of the demand in there is generally outside of economic realities, right? If my life sucks and I need to take a drug, I'm going to find a way to take that drug to make my life better. You know, it's very inelastic demand. But
Yeah. Did I tell you what my buddy in med school, what they're telling him to prescribe to people who are experiencing certain things? And like why? And one of the largest donors to the school is a certain company that makes a certain drug that is just so happens to be the drug they're being told to prescribe.
I know, but I'll defer to Andrew. Andrew, you can.
I haven't heard this story, but it's a
It's an
pharma
off-camera
company.
story. It's an off-camera story because the case can't be recorded. Plausible deniability and all that. Ivermectin. Oh my god. But yeah, so the flight to safety, if you're not already in it, might be, you know, you might be chasing, I think. So all right, the last question that we'll ask for the stream tonight is what are we buying ourselves? I think that's what a lot of people are often curious, and they're like, well, you guys talking about all this stuff, you know, China this, China that. What the heck do you guys see as an opportunity out there?
So there's two things. I'll just go first and be real quick. I think you have, because we'll talk themes. I mean, if you want me to give specific stocks, I can. But one is just making a bet maybe on the bounce back. You had a really sharp pull off in these AI names, maybe some warranted, maybe some not. So maybe making a positioning so that if there's a snapback, you do well. I have been more bearishly positioned, so I'm not buying a whole lot, guys. I am selling a lot of things actively. Yeah, they're laughing because I am. Fabio's told me before. He's like, "You're a bear. You're like watching the market go down. Like, yes, burn."
Oh yeah,
like
The mad lad.
I'm like, was it Nero who's like playing the harp while Rome burns? So
yeah. Andrew is perma bear. Andrew.
yeah.
I think that's a little unfair. I get the joke though.
Yeah. No, but I'm still sticking to just to be clear, is the cheap companies that are doing something about it. That's been my theme going into the year, and that's going to be my theme still. I think we've talked about this quite a few times. If not, you can go back and watch, but that was the theme.
Mm-hmm.
It continues to be so.
Bacon.
Yeah, a lot of my buying activity already happened. Like, don't get me wrong, I decided to nibble around, but we're talking like 1% here, maybe 1 and change percent there. So like nothing that cool or fancy, like nothing where I get to stand on top of a mountain and go rah rah rah, look at me, I'm so smart, I bought dip. But like again, I think there's still like viable opportunities. I'll throw out a name. Coupang. or coupon.
Oh, different international. Yeah.
Yeah. You know, it's one that has roughly been relatively flat-ish, bounced around here and there though, so that's not fully fair. But you know, at where it is right now, maybe there's something there. I recently purchased some opportunities. I'm a little hesitant just because of the micro or the market cap, but Grab I think
What?
is starting to show some signs.
You said that, and then a comment came in. How about Grab?
Yeah, yeah. Well, yeah. I'm a
Tiny.
I'm a little hesitant just because of the market cap. But you know, I think there's some there are some opportunities in areas that normally I wouldn't go with. I've jokingly said that my portfolio's turned into a boring one, but you know, there's opportunities here and there. So it's shaping out to be a fun year so far. Still plenty of year left. Like January's not even done yet.
Yeah. Okay, so I'll kind of summarize by saying I'm in the camp with these two gentlemen for sure. So cheap stuff, doing something about it. I'll throw in some extra stuff to kind of spice it up. But I think that, well, I want to emphasize, you know, we spent a good part of a couple hours now discussing, you know, what the overreaction here was. And so while Saturday, or we did the live stream Saturday. Yeah, we did the live stream Saturday. Well, on Saturday, we were maybe, you know, hesitant, or that's not the right word. Yeah, I'd say hesitant to say it's like, you know, a buying moment for a lot of these DC plays. Well, that's changed a little bit. We'll see what happens tomorrow, or today, I should say, if you're in Eastern time. And Wednesday is going to be one of the big pivotal moments to see if the sentiment quickly reverts back, or you know, gets pretty serious to the downside. It really will matter, believe it or not, what Meta says. So some other plays that are quite interesting and adjacent to that is energy not related to data center. That also might be an interesting place to hunt for. You know, I've been participating in some discussions on, you know, offshore opportunities. There seems to also be opportunities in some, you know, more niche energy players in Latin America, Europe come to mind. And there are also, you know, some other beaten down European names that also seem like, in theory, they'll do well. The numbers check out. There are some risks. Home builder in the UK, you know, to name one. Gambling company in Sweden, to name another. But
one thing that could be interesting is that if you think Trump puts pressure and the Fed caves to lower interest rates, you could see a weakening dollar, which would
you could
be a benefit there. So
we saw private equity fall today. There was a question. I saw it. So
Yeah,
don't worry. This one here.
Yep.
Ty can talk about why I could care. So all I viewed it as private equity. This is, again, reading through the tea leaves, because not all private equity fell. Bridge, for example, was actually up today. We talked about Bridge over the weekend. That's the real estate one. But KKR, Apollo, and company, they didn't have a good day today. I theorize it's because the market was looking at them and saying, you know, you're a representation of a basket of, in theory, riskier assets. So I don't have that appetite right now. But really, there's no direct news. Rates wouldn't really have something to do with it. I think longer term rates fell. That should be, in theory, good for hurdle rates, make also alternative assets more attractive as those rates come down. So that really doesn't make any sense.
I mean, they're high beta usually. I don't think it's crazy. I do have two like important things to point out with them. Well, yeah, so they're high beta, which just means they are going to, when the S&P is down 2%, they're generally going to be down more than 2%.
Yeah.
I mean, they have alpha within them, but they're also high beta. That's generally PE is.
Oh, and I'm going to disagree very hard on this comment. What NVIDIA says almost doesn't matter because NVIDIA is the supplier. So the customer matters way more. So what your customers are guiding for. So basically, you won't find out from NVIDIA that NVIDIA's cooked. NVIDIA is not going to tell you they're cooked. You're going to know they're cooked when their customers say, we're cutting CapEx by half. Then NVIDIA's cooked. That I promise you. Like I promise you, you will. That's how you'll find out. You will not hear Jensen come on and say, we're guiding sales 50% lower. No, we can make a friendly bet on that. Because it will eventually happen. I don't know when, but I can promise you the customers will tell you when they're cooked. Not same thing with Taiwan Semiconductor. Taiwan Semi is not going to be the one to tell you, yeah, we're guiding for half off.
No. I also will disagree with P. Morton saying this is going to make 2008 look like a dry run. I don't have that feeling at all.
That's like sir, 2008.
That was
2008 was an economic crisis. This is AI data centers maybe being overvalued, and
I view this as a normal market. Like
What?
even with like a big name like NVIDIA being down, it like how many times has this happened where market participants shoot first and ask questions later and then act accordingly? Like I think this is pretty normal. Like, oh, we have pockets of bubbles here and there that seem egregiously expensive, but also some prospects that are like possible value or value E or reasonable growth. Like it's a market.
I do like the idea of getting data center default swaps.
Michael Burry, no.
Dibs on the ones in Wyoming.
The Seawolf Capital guys, they'll be coming in.
Yeah. Any other topics, Fabio?
Well, this is also, I disagree with this because the customers told you in 2022.
They did. I just didn't listen.
Yeah, they did tell you in 2022.
Or I didn't connect it. Although we were smart in saying like data center man. We just like played things that were NVIDIA. We're stupid.
Yeah. We just went around the obvious, but yeah,
You got there eventually.
Literally all of them told you. Meta was the loudest, but everyone wanted to be a little silly and make up narratives.
Mm-hmm.
But Meta told you, like there was truth. There was a kernel of truth in the arguments, right? Saying Meta's going to spend a lot of money. Very scary. What they were spending a lot of money on was the falsehoods. What they were spending a lot of money on was your clue. And obviously hindsight, right? We should have looked back and said, oh, I'm going to buy Meta because they're going to get all this potential return out of it by building their own internal tool sets and developing their own hyperscaler. All that happened, but NVIDIA was better. You would have made Meta provided a great return, but NVIDIA technically was better. So, but yes, 2022. Yeah, they told you. And whatever year that it falls, you're going to hear it from them too. You're going to hear them say something along the lines of, they might not say it as direct, but maybe they will. But sometimes they're a little crafty about it. They don't say it as directly, then the analyst might catch it and be like, wait, what do you mean? What is this guide you're doing? We're waiting on further clarity before we proceed certain projects, something like that. Do you think that is why Meta is up today? Market is speculating that they will say they're cutting cap. No. It's because when you actually sit down and think about it, a company like Meta, I'll actually propose it in a question. I don't know if this update's fast enough for you to answer this question, but can you describe to me the quantity of net income you can attribute to Llama? We'll start with that. But we went on like a whole tirade about this. We spent like 40 minutes on this, but
And people still argue back and forth.
yes, no, continue. So we're just doing our part, sharing our opinion out there in this video. We also talked about this, but I have no problem with kind of like, giving the spark notes, but effectively, and that's like I think in the second chapter of this live stream, you'll find it. But effectively, there's I went on an explanation about the declining cost of these LLM inquiries, and there's a comparative analysis you can do between the cost of each query versus a search query. And the search query argument is the search queries are much cheaper. Well, if these costs are getting smaller, what happens if they get even smaller after that, and even smaller after that, even smaller after that, even smaller after that? That's a fear. So Meta doesn't care about that. Amazon doesn't care about that. Those two just so happen to be the ones that were up today. Funny enough. Not funny enough. It makes sense when you actually think about it. What is llama?
Why is llama?
How
How
is
is
spit
llama?
on you? That's what llama is?
Oh no.
Llama
Very
spit
sad.
on you. Yeah. But there was a comment on the live stream that the person deleted it. I almost want to be petty and bring up the comment of the person who deleted it. But
Is that what you were telling me about before the stream?
No, that one's a request from someone. I don't know. Because okay, in passing, I'll say like there's a group of funny people who have some sort of like I don't know how to say hard on for anything and everything a certain person. And then so they get a little upset when there's like any criticism levied that way. And they really, really wish there was a downfall coming, but they have no idea. So. Well,
it's okay. You're allowed to like who you like.
Yeah. But the one I'm referring to right now is there was a comment. So I'll refer to this person. I'll keep your privacy this time. Normally I don't do this, but don't delete your comments. First of all, I can see all your comments when you delete them. Anyways, there's literally no point. And you feed me when you do that.
Oh no.
Because I like to be petty. I love to be petty. I'm restricting myself today. You commented way too early. Way too early. But if you keep your comment and then you also go like, dang, and you have fun with it. You gotta have fun with it. Don't be too like, there's a phrase, stick up your ass. Don't have that. If you don't have your stick up your ass and you come with me with like, criticism and stuff like that, there's no harm, no foul. I love the back and forth. Love it. You can disagree with me. I love it.
Don't disagree with me though. I don't care what.
Not with Andrew.
What mood you bring. I will go scorched earth on you.
Yeah, he's a dick. I'm nice.
Yeah,
I'm only a dick if you're a dick. If you're a dick, I'll be a dick, but I'll have fun.
Disagree with me. Chances are you'll probably be right.
I'll have fun. I can wait years, by the way. I've done that before. I've been known to do that. I will wait years.
I can confirm.
You will. But I will just go. I mean, if you disagree with me on a stock that I'm shorting, and then I will harass you until you block me and leave the server.
Oh no.
Yeah. I'll describe the one story as like fun entertainment. The one where I literally waited, was it 2 years or something? 2.5 years.
Mm-hmm.
So it was on Alibaba.
Oh.
The price was like $300 something a share. You guys know how I feel about Alibaba. If you guys are new, haven't liked it. I just don't make content right now because I feel almost bad trashing Alibaba while it's down. That's why I say I'll wait for it to like do some shoot up and then I'll come out with my opinion. Otherwise it just feels like it's not as fun. Which, speaking of which, it's fun now to talk maybe a little bit about SoFi. We'll talk about it a little bit after because it's up. So we can talk bad about it now because it felt bad a little bit to talk about it while it was down. But we can maybe discuss that in a second. So stock is like 300 something a share. I discussed with someone who wrote a whole report on it, and you know, in their comment sections, and I outlined the whole risks, etc. We go back and forth basically. I won't go through the details, but it's really funny because how some of that stuff really developed. And then the person ended with like the comment, you know, oh, you blah blah blah, you should stick with index funds. You guys know what happened to Baba, and you know, hey, come back like 2.5 years later. You know, did you move your assets to index funds? You know, it was a little bit more colorful than that, but I like to have fun. I'll have fun, and I have, you know, I'll wait. So, long story short, if you write a comment, don't even delete it. Don't bother, just leave it, and then we'll have fun. But if you have fun with it, I'll have fun back with you, like in a fun way, not in a mean way. So,
and to answer Jonathan's question, I think Oracle looks pretty interesting here. I haven't done the work. They got killed today.
yes, they did.
I don't know why they got killed.
Well, I'm reading through the tea leaves here. The right now, this question about investment is going to affect the investment that SoftBank's going to do. So now the investment in SoftBank is not going to happen. Is how I'm reading it. But I disagree with that narrative. I don't agree with that narrative. I don't really know what SoftBank is going to do or not do, but that's what the market's saying.
Because they were up 12% from Tuesday to end of day Friday. Does that make sense?
Yeah. They just gave back a lot of those gains.
Mm-hmm.
So I think that covers all the topics we really wanted to. And let me make sure. Yeah, we covered all the topics. So I think we can close off after that.
Sounds good to me.
All right. With that being said, guys, thank you guys.
Wait, the poll.
Oh, yes, the poll. All right, let's close the poll.
There's a poll.
I left the poll up.
Yep.
So the question was, are you bullish or bearish data center spend? 73% entered bullish, 27% entered bearish. So most people are still bullish. That's the contra. We should tell tomorrow.
Oh, poor chat.
Thank you for providing this valuable information to us. So, with all that being said, in all seriousness, you guys already heard our thoughts here tonight. That poll doesn't change that. All right. Thank you guys so much for joining us in tonight. If you're not subscribed, go ahead and subscribe. Feel free to like it if you enjoyed it as well. Share it with whoever you'd like or not. Doesn't matter. And if you're curious, the link is in the description below to join the Capital Mindset Club to see my portfolio, Andrew's portfolio, all of our analysis and the like, weekly calls and ICOMs. And we'll be seeing you guys on the next one. I'll leave you guys out with the outro, the classic one.
Okay. We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.